So let's talk about voluntary benefits and beneficiaries. Now, if I was to ask you, who is the beneficiary of your health insurance? Who would you say is the beneficiary of your health insurance?
Wife.
Spouse? Nice. Anything else?
Me.
So, no, you're not. But it's a good guess, right? We benefit because we seek medical attention. But actually, the beneficiary in insurance is the person who gets the check. So since Hurricane Sandy came through recently, if anybody had a claim, you'll know that the check was made payable to you and to the mortgage company because you guys own the house. And the beneficiary in a life insurance plan is the person who gets the check. And the beneficiary, if you had an auto accident, they don't just write a check over to the auto company. They either write it to you or to you and the auto company for the repair. The beneficiary is the person who gets the money. So voluntary benefits. What voluntary benefits are is a manner in which you insure yourself where you are the beneficiary. With health insurance, your health care provider is the beneficiary. It might be the blood company that gets the check. It might be the doctor's office that gets the check. It might be the nursing care provider that gets the check. The beneficiary is always the person who gets the check. And one of the really neat things about voluntary benefits that a lot of people don't know is that you get the check. Now, it used to be that health insurance, we got our check. This was a really fun time for fraud. If you were fraudulent in the early 70s, this was great. So here's what you could do. You could buy a health insurance plan with Aetna. You could buy a health insurance plan with United. You could buy a health insurance plan with the Blues. And then you have an accident. Fall down the stairs, you get a hospital bill. You submit it to the Blues, you submit it to United, and you submit it to Aetna. You get 3 checks, you pay the doctor, and you came out ahead. So that was a little bit difficult. That's fraud. So the insurance companies now work together. They call it coordinated benefits, and you really can't file 3 times for the exact same accident anymore. Insurance is designed to keep you whole. It's not really designed to make you wealthy. You're not supposed to become wealthy. You may feel better off, right? If your house burns to the ground, and I have a house that was built in 1850. If you put the same house up with 2010 plumbing and 2010 electrical wiring, I'm going to feel I'm ahead. But if it still has the same number of bathrooms, it still has the same number of bedrooms, all they did was make me whole. Okay, so insurance is designed to make you whole. And voluntary benefits are a tool that are available to consumers to help protect you personally when an accident or an illness happens. So for example, disability. Disability is a policy that you can buy to protect your income in case there's an interruption in your income due to an accident or an illness. You are the beneficiary. The check comes to you. You can spend that money the way you please. It's not designated for some third party. That's what disability is. There are plans out there like cancer plans or hospitalization plans, accident plans. Because what happens, as I learned, when somebody in the family has a big accident or a big illness or even a little illness, you go from 2 people working to like nobody working. So all your regular bills keep coming in, and then some nifty new bills start showing up. And you may not have disability, and you may not be disabled, because if your spouse is disabled and you're taking care of your spouse, you're not disabled. You can't pull on your disability because you're supporting someone who is disabled. So you have no money coming in. So the point of voluntary benefits is not, people often say, well, I don't need that because I have medical insurance. That's great, the doctors get paid, the hospitals get paid. Who's going to make sure that there's money in your bank account? That's your responsibility to make sure your bills are paid and your obligations are covered. And when people are talking about voluntary benefits, you're the beneficiary. The money is coming to you, and it's a way of keeping the household complete at a time of financial crisis. And one of the things that's real important as we move to an era of higher deductible plans is either you open a savings account where you put the money that you're saving into a savings account to protect you in the event that you actually have to draw down a big number like $2,500. Alternately, you pick up some voluntary benefits so that if you are admitted to hospital, you have money coming in. If you're really good, you find, well, I have a $500 per day deductible in the hospital. I want a $500 per day benefit that's going to cover that deductible up to $2,500. So one of the things that's really important to think about with health insurance and with your insurance portfolio is the role of voluntary benefits and how you yourself can benefit from coverage that protects your family.